GameStop's warrants could reshape the entire market. GameStop is currently trading at $25.53 at an $11.4 billion valuation. The warrant dividend, which was just announced September 9th, a couple days ago, the warrants currently have an exercise price of $32 with an expiration date of October 30th, 2026. But the mechanics of how these warrants are about to be issued could have some significant consequences for both market structure and for GameStop's future. So who gets the warrants and who doesn't? So the warrants will be issued to the company's shareholders or note holders as of the record date without any action required. So while the company has committed to issuing these warrants to registered shareholders, several brokers have already signaled that they may not deliver warrants directly, but instead they're going to pay these shareholders some cash. So if a shareholder holds GameStop shares through a broker that does not pass through the actual warrant, that investor is essentially cut out of the intended benefit of these warrants. And the main question is how many real versus synthetic shares actually exist in the market. The company expects to distribute up to approximately 59 million warrants on Tuesday, October 7th, 2025. This is the distribution date. This is going to be one of the most important dates that we're going to be following. So on that date, brokers and certain counterparties will face a choice. They're going to have to obtain real warrants, and potentially they will need to buy stock to do so, or compensate investors with cash. Now, what happens to the price pressure of GameStop stock? If GameStop surges past the strike price, warrants become deeply valuable. This could spark some buying pressure, legal disputes, and heightened volatility in this GameStop stock. If you are a shareholder of GameStop, you are legally entitled to receiving these warrants. And what if they don't give you those warrants and just pay you cash? That gap between what is issued and what is delivered should raise some concerns for regulators and not just retail investors, and we're about to see what happens in the next couple weeks. This thing could be a hot mess for brokers, regulators. It's going to be a test. It's going to be a test for the markets. This might be a whole market thing larger than GameStop itself. The true impact of these warrants may lie not in the strike price, but in what they force the market to reveal. Because if this whole thing does reveal that there's a bunch of mismatches between the brokers and registered shareholders and the issuance of these warrants, GameStop's board could decide to issue additional warrants in the future. Even if the stock price never reaches that strike price of $32, repeating the process would steadily raise the cost for these intermediaries, for these brokers, maintaining synthetic positions. So how long can these brokers who aren't wanting to issue the warrants, how long can they keep manipulating this thing? So in short, warrants may serve not only as an investor benefit, but also as a tool for GameStop. This could reveal where the system bends under pressure. 3 weeks on this distribution date, we're about to find out what happens. For every 10 shares of GameStop, you get 1 warrant. Let me know what you guys think is going to happen in the next couple weeks. The countdown begins. Shorts better close.